So, thank you for that. Amit Gupta is with us, Senior VP and Fund Manager at ICICI Securities PMS. Amit, good to have you with us here. Good afternoon. You heard that summary from Hormuz on PSUs. I just wanted your thoughts. I think you own BDL, right? Bharat Dynamics in your portfolio.
So we had a higher portion actually of the PSUs in our portfolio, and for the last 1.5 years, and we have made good money also there. I mean, when you buy a stock, you don't expect it to getting double actually so soon, but it has happened in the case of PSUs. And so we have trimmed down our positions now. If you look at, we had almost 35% weight. Now we have brought it down to 20% in our portfolio. And we believe that going forward, some new sectors are emerging now. And I think that is where we need to focus. Those which were not performing in the last 2 years or 3 years, I think that is where the market is shifting. This is a tactical shift, but we need to definitely participate into that tactical shift also. So PSU as a space, I'm not saying that the whole stream is going to go away, but they may definitely enter into some time correction. It's a primary trend, but it will pick up after some time only. I think the way state elections also are going on, and we have seen some kind of freebies also being given over there, that will also have its toll actually on the PSU stocks. And I think the rainfall and all, I mean, it was good. So some consumer names, if they have to participate, money may not go out. Money may move from one sector, this particular theme, to another theme, which is going to happen now.
Amit, afternoon. So from here on, would you look to further bring down your PSU exposure from the current 20% or keep it at these levels?
So far, we are keeping it at these levels. We have already booked some profits, and I think we are just looking for the fresh allocation now in this particular volatility going forward.
Allocation to PSUs and which other sectors you said in terms of a sectoral rotation?
Yeah, so basically, if you look at the sectors like technology, right, rural-related segments, consumer segments, textiles, sugar-related, segments, I think that is where we need to shift our money now, because I think they were not participating before. Some of the pharma names can still participate because still there is a drug shortage in US. And I think all of these segments, they are not so-called high beta segments, but definitely the money allocation is going on, I think, now in these sectors. So that is where we are focusing.
And in technology, is it large cap, mid cap? Is it the ER&D players?
Yeah, sure. So I think among the large cap also, if a company is focusing more into ER&D, I think they are definitely going to be a beneficiary. It is not only a game of only IT services now. You have to be into products and services. You have to be there in ER&D to garner, I think, more attraction. So that is what, SCL Tech is also doing. SCL Tech over the period has started outperforming Infosys and TCS on a relative, performance basis. And it is happening just because they have moved more into ER&D segments also. If you see in the automobile, previously we used to have only 10% of softwares used, but now it has gone to 26%. And going forward, it will be 55, 58% also of the softwares used in automobiles. So I think that is how the markets are moving. And that is what the companies also have to be well equipped. Yes, on artificial intelligence, all of them are working. In fact, their clients themselves are asking them to come out with an AI tool. So for example, if a company is catering to any pharma, the segment, so the clients, they are asking for AI tool for the clinical trials, etc. So I think they have to work on AI. It's a challenge, we understand, but they have already started. And you need to look at the history. Whenever any new technology comes, initially there is some volatility, but slowly, because ultimately our companies are selling that technology or going to sell the technology at a cheaper rate, they get benefit. And they understand the technology also very fast. So I think this is the benefit which goes to Indian IT companies eventually. And when the interest rate cut cycle is going to start, I think the valuation derating also should stop somewhere.
Got that. By the way, the market's up 70 points. So, it was up 20 when we started in the program. It's added on quite a bit more very, very quickly. And of course, banks are the ones, the large banks are the ones which are doing the heavy lifting. From being up 0.8, you got about 1.1, 1.2% kind of gains in the Nifty Bank. I mean, the leaders here, of course, are the ICICI banks of the world. ICICI Bank is up a full 2.5%. Kotak is up about 1.5%. IndusInd is up 1.33%. There is Axis, which is up about 1.25%. You know, out of the financials, Amit, what do you own?
So we have, some of the PSU stocks also. For example, SBI is very much part of our portfolio. And so we own this because we don't expect too much of downside also. So if the downsides are coming in some of the PSUs, I don't think that kind of significant move is going to come on the downside in the PSU banks. Because if you see what has happened, I mean, the loan to deposit ratio in the PSU banks is much lower than the private banks right now. So SBI has somewhere around 66-67%, and RBI has laid out a range around 80% that they can bring it down, they can bring it up to 80%, but those who have higher LDR, they have to bring it down. And that's why if you look at the results recently in HDFC Bank also, they were selling some of the loan book to bring it down. And that's a positive actually with the PSU banks. I think going forward, the only thing is when you are bringing your 66% to 80%, you need more capital, and that's why you increase the FD rates also. And that is the reason the PSU banks have higher FD rates recently than the private banks in some of the cases. And I think that was coming as some of the pressure in the near term. But I think the interest rate cut going forward, NIMs getting shrunk, those things are factored in the price now and will get factored with some more time correction, and that's all.
JSPL is one of your top calls, top recommendations. What is it that you like about JSPL, which makes it attractive over the longer term?
So in fact, we have recently added some positions when the stock had corrected, because it is Jindal Steel and Power actually. It is JSPL, because if you look at from the efficiency perspective, we have seen one of the best efficiency coming back into this particular stock. The metal prices are already lower now in anticipation of some of the slowdown in the global economy. But I tell you one thing, we are in the financial markets. I still remember in 2021, the bond yield spread in US had gone negative, and it was factoring that the slowness is going to come in the US economy going forward. So once the financial market, the debt market had factored that particular thing, and then equity markets for 2 years in US were reeling down, and then they recovered. I don't think we should again talk about too much of slowness in the US economy now. So rates cuts are coming, and if the economies remain resilient, what we are seeing currently, I think some of the metal revival can also be seen. And the kind of weakness in China and their impact on metal prices, I think to some extent it is already getting factored now at these prices. So that's why we feel that going forward, the companies which are getting the mines, so JSPL is getting the mines, so the captive part also is coming up, which will give them benefit of the raw material cost also. And that's why their efficiency, which has already recovered much better, their debt to equity had declined from almost 4 times to now 0.1 point something. And so from that front, I think we have a much higher target for the stock going forward. It can take some time here, but eventually the downside does not seem to be too much now.
All right, Amit, we'll leave it there.